Hello everyone, I'm Marty Pospischil, and once again I have invited Paula from Invis, the Siemens Group.
You got it.
I got it right this time, yay, good start. And today to discuss what does a mortgage pre-approval look like today. It's constantly in flux, there's lots of new regulations coming out. And boy, the last big one was the stress test. Now we've got higher rates in place. Paula, thank you for coming.
You're welcome.
In today's market, we have still a number of people taking advantage of the new market pricing in real estate and buying homes.
Mm-hmm.
We're busy with buyers out there, everyone from first time all the way up to high net worth investors getting mortgages. What is the process today like, sort of in a nutshell? What are the steps that they have to go through? And what are things that a consumer who's wanting to buy over the next shorter period of time have to prepare before they talk to you, Paula, in getting that mortgage approval?
Yeah. So the current situation is with the stress test.
Mm-hmm.
The documentation that has been required has gone up quite a bit. So if you did your mortgage, 10 years ago, the process that you underwent is quite a bit different than the process today. And I always have to break that to my clients and let them know that what I'm going to be asking of them is going to feel like a lot of documentation, because it is. And so essentially, every number that goes into the stress test needs to be supported by a document.
No question.
Saying that the numbers that we're using are in fact accurate. So what that looks like is you need to have your income confirmed. For somebody who is salary, that's the easiest, because typically it's a letter of employment outlining a person's position, start date, and income, and a current pay stub.
Mm-hmm.
But more and more we're finding lenders also tagging on 2 years T4 slips on that, and sometimes even the notice of assessment to show that you are actually up to date with CRA.
Right.
So that's the easiest form. But when you get into self-employment, then it becomes
different ballgame.
Different ballgame. So now all of a sudden you need to come up with your business financials for 2 years, your T1 generals, your full T1 generals with all the pages.
Nothing cropped off.
Nothing cropped off.
All the attachments.
Nothing redacted.
Okay. Right.
For 2 years, your notice of assessments and your articles of incorporation as well.
Wow.
And then if you have more than one company that you might be paying yourself through, such as a holding company, then you need that for the holding company as well. So depending on how complicated your income situation is, will determine how many documents that we need. And then if you don't have any other properties, it ends typically there, aside from the down payment confirmation that we need a 90-day history on. If you own more than one property, we have to show the mortgage statement, property tax bill, the AGM to show any kind of strata fees, and the lease agreements in addition. So if you can imagine someone with 3-4 rental properties who's self-employed.
Right. Oh my God, it's like a myriad of information.
The documents are huge. In fact, I just did my own line of credit, and I think I had 32 documents that I needed to supply just because it's complicated.
But you're organized. You've got them all probably in your Google Drive.
Fairly organized.
Everything in PDF.
Fairly organized.
I'm the same. I'm type A. But for those of you that aren't,
do it.
All the power to you. Get it together. Get all that stuff together.
Yeah.
Now you touched on something that I wanted to bring up. Thank you for bringing up investment properties. As an investment property holder, I heard a rumor. Now, clarify this, that the government was talking about not allowing revenue or rental income on investment properties for qualification?
Yeah, so the rumor, and the rumor was within our industry. We haven't seen anything official. It would come through OSFI, which is the Office of Financial Institutions.
Okay.
They are the governing body for all lending. And the banks and their activities. But effectively we were told that rental offsets were going to be eliminated. So far, we haven't lost the rental offset entirely.
By rental offset, you mean?
So rental offset means that, say, for example, if somebody has $1,000 rent, they get to use, say, up to 800 of those dollars, directly deducting that from the mortgage obligation so that the qualification is easier.
Okay, assuming like a 20% vacancy or whatever.
No, not necessarily. It depends.
Okay.
Each lender has a different way of doing it. The standard industry standard was that you would take 50% or $500 of that $1,000 rent, and you add that to your income, and then you have to qualify for everything. So that's the
Fair enough.
That's the industry standard.
Okay.
But we would have lenders that have special rules, which is this rental offset, where they actually take a portion and deduct it from the obligations. And so that ends up requiring less income to qualify for the same loan versus going to a lender that has the 50 add policy.
So the rumor is that this might change.
The rumor is that this was supposed to change back in October. It didn't, and so far it hasn't been officially announced by anybody, and so now it's a little question mark. I wonder if it's still coming. Is it
maybe
20?
Not.
Is it a 2023,
right.
Or maybe they're waiting to see
how
what
much
happens
would it be, or right. with the market,
everything.
with
Yeah.
everything.
Yeah.
Okay, so it's still a rumor. Not to spend any more time on that. I would never get a mortgage again if that happened. Likely,
for sure.
right?
Yeah.
And if you own a number of investment properties, just something to watch for if that rental offset rumor does become reality.
Well, and it's interesting because the federal government, the local government, BC government, everybody wants more housing to
right.
be created for people. So you would actually think that you would incentivize people to allow them to qualify
yeah.
for more rentals, because then you're putting more rental stock in the market.
Not always does everything they do make sense to me.
Often it doesn't.
Often. It's like, think this through, guys. Get industry feedback before you roll these things out.
I couldn't agree more. Yeah.
Right? But not to get political.
Yes, well, yeah.
So that's an interesting side of it for multiple investment property owners, you guys. That's something to watch out for. What else should I prepare for if I'm coming to you to get a pre-approval? Anything else that we haven't covered?
Well, the last piece is just the down payment confirmation, and the rule is that you have to show a 90-day history of where the funds are coming from. And so my advice would be to make sure that you have in PDF form all of those documents, but your history of your down payment, and don't move money around.
Okay.
Often clients will think that they want to move money around so it's all in one account, but every deposit over $5,000, we have to show the 90-day history of that account.
Oh my.
As well. So
okay.
it gets to be, down payment confirmation is one of the things that we like the least.
Okay.
And when people move their money around, they're often put out by us having to ask for more and more documentation. So my advice to clients is, until we're done with the actual approval process and everything has been satisfied, don't move your money around.
Stuff around.
Don't move money around, yeah.
And I always forewarn our clients, be prepared for keeping it clean, a full probe.
Yeah.
Like, they're going to do a full probe.
Yeah.
They're going to ask you for everything and everything, anything and everything, financially, that you own, and supportive documentation. I know through my last pre-approval, I was asked things that I found like, why do you need this information? I've got mortgage approvals and mortgages in place, and I'm always making my payments. Why are you asking for this? But this is normal.
This is normal
This
now.
is normal.
Yeah.
So be prepared for that. Don't feel you're being singled out by asking for all this information. Everybody needs to go through that. And we try and prep our clients that way.
Yeah, absolutely.
Yeah.
Now that is going to change.
It's going to change.
Everything is going to change because we are gravitating towards a new system with the open technology that is happening between lender to lender, credit bureau, what have you, CRA to the credit bureau.
Okay.
We're going to get to a place where you won't have to supply everything because you will just have to give an authorization, and CRA will send your tax returns and what have you.
It's all online.
To the lender, yeah.
Wow.
Yeah. The credit bureau, Equifax, well, Equifax, because there's two credit bureaus, but Equifax in particular has been working with lenders for the last year or so, supplying job letters, supplying pay stubs, to try to stave off fraud.
Right.
So
fair enough.
we will be getting to a place where you will give authorization and all the information will come directly from the bank, directly from CRA, directly from your employer. And that there'll be fewer hands to touch it to perhaps alter documentation.
It sounds extremely efficient,
Yeah.
but it also scares me a little bit. And the term Big Brother comes up.
Oh, it's already here.
It's here.
It's here.
They've got it all already.
Yes,
Right.
they already have it, and they
Right.
actually do. This is a very important tip.
Okay.
They do a fraud check at the very end of the approval process. And if you have gone and done an inquiry with another financial institution and perhaps presented your application slightly different to the way that it's currently being presented,
Right.
they will know about it and it will flag the mortgage.
Good tip.
Yeah.
Be honest.
Yeah. There's
Don't
just
do
be
things
honest.
differently with different, is because they're all talking to each other.
They all know everything.
They know everything. It's all knowing.
Yeah. It's
Right.
all knowing.
This is like a sci-fi movie that you'd see and go, oh my God, I hope it never gets to that, but we're getting to that.
But we'll get there.
We'll get there.
I don't know when this is actually will all be in place, but there's already parts of it
Right.
that are in place.
Right. So hiding cash under your mattress is becoming more and more of a thing these days. It's the only way they don't know about it.
Right.
Right.
Exactly.
Right?
But then you still have a problem. How do you show that?
Yeah, absolutely, absolutely. So that's really interesting. So things are changing. Is there sort of a timeline when this new system might open up?
I think within a year, maybe two maximum.
Big changes.
That will be the process. We can already do it. In fact, I can now just ask a client to log into their web banking and give authorization for me to get their notices of assessments directly from CRA.
Okay.
They can also give me authorization to have the financial institution give me their bank statements.
Right.
So I already have that technology, but it's not uniform throughout the industry yet, but it will become.
And there's going to have to be a lot of safeguards in place to protect that information for fraudulent activity. If somebody fraudulently gets access to that, wow, they got access to everything.
Right.
Which is a little bit scary, but I'm sure that's what's being worked on now.
Yeah.
Right,
Yeah.
Right. Wow, big changes.
Yeah,
This is all
yeah.
news to me. This is good stuff. Very good. Okay, so that pre-approval process. What is, if I decide today, and I've got everything organized in all my folders on my drive, and I've given you permission to access whatever else you need. What's the timeline before you can come back to me and say, okay, Marty, you're good to go. You should be able to borrow roughly up to this amount safely. How long does that take?
So if you come prepared with everything, typically it's either that day or the next day, depending on how much workload that an individual has. Right now, within the banking system, the branch system, it would be weeks. They're a bit broken right now, and unfortunately, nothing happens quickly within the branch system.
Right.
A lot of lenders' branch systems have, I don't know if you've noticed, they've almost become like living rooms where they don't really have bodies.
The TD green chair is
like they've just,
very lavish.
TD still has tellers, but CIBC's turned it on and a
I've
couple
noticed
others.
that, yeah.
And so now you're having to make an appointment to even get the process started.
Right.
And often that can be 2 weeks. But if you go with somebody who's independent like myself, a mortgage broker, you can get an approval 1 to 2 days, no problem.
I would never personally try to get a mortgage approval at my bank. I would always call you or email
You've been
you.
great, yes.
Right, of course, because you just know what you're doing and you have a much better perspective on how it works. And I find Not to say anything wrong about the branch level mortgage people, but typically I find that a lot of them are newer and they may not have that kind of expertise needed to get you an approval that I know you would be able to get. Does that make sense? Is that fair?
I mean, there is a place for the branch system. There's certainly certain things that they can do that sometimes other, like mortgage brokers, can't do. There's, you know,
based on your history maybe with the bank, or?
You know, well, you would think that that would be something, but unfortunately everybody goes through the same process. But it's when you're dealing with a corporation, corporate lending is easier within the branch system itself versus a mortgage broker, because many mortgage broker lenders don't like, you know, lending to corporations.
Right. The bank already, if you're dealing with that bank as a corporation, they've got a lot of your stuff already.
They have everything.
They have everything.
Yeah.
They've done the probe.
Because you have to keep giving it to them.
I know that very well. Yes, I
yeah, so they know everything about you, so then sometimes that is an easier process.
Right.
But on a pre-approval, the other thing is that there are quite a few institutions that actually don't pre-approve you. They will give you a rate hold, but they won't do the work to tell you exactly what your qualification is.
Right.
And they may not give you an actual pre-approval with like a pre-approval certificate or what have you.
Right.
Whereas if you're working with a mortgage broker, the mortgage broker is able to not only get you actually a pre-approval, but they've done the full underwriting before even submitting it to the lender.
Fair enough. And that was my next question. Do you actually get a pre-approval? And if you do, it usually comes with a list of qualifications on it. So it is still pretty standard that when I'm sending a client to you to get pre-approval, they'll have a very good idea on how much they'll be able to get from a mortgage point of view.
The only variable that can sway the numbers is if somebody's buying a strata property. We don't know what the strata fees and the property taxes are.
Of course.
And the property taxes obviously will be pretty close. But, you know, from building to building, strata fees can vary, you know, from $350 to $550.
Right.
Well, that eats into your qualifications.
Right.
So we do our best to use a reasonable number that we think should hit most properties.
Yeah.
But we may be a little bit low, and then you could be impacted slightly. So I always welcome clients, even after they're pre-approved. I will suggest that they send me any kind of sample listings for things that they've been looking at, so that I can revisit the numbers to make sure that everything holds.
Makes sense.
And then I can also give them what their actual payment will be.
Makes sense.
So that they can have a sense of whether this is going to meet their budget.
Okay, and you've touched on another question that just popped into mind. Are the banks reviewing the minutes for strata corporations before they're lending on a specific property?
It depends on the lender.
Okay.
Many do. Some don't, but at the same time, sometimes they do review information about the strata corporation as part of that last minute fraud check. And
fair enough.
Sometimes they will request a Form B at that point, and not during the approval process. So typically we recommend that we get everything up front, even if we're going with a lender that doesn't typically ask for those items.
Right.
Just so that we can have a review to make sure there's nothing that's going to pop up at that last minute check.
Fair enough.
Because literally the check happens a few days before
Okay.
completion.
And the Form B is something we typically ask for when we're helping you guys purchase property anyways as part of the subject period. And every listing agent should have that on file when they have an active listing. So that's information that you should probably get ahead of time.
Yeah, and also on your property disclosure, anything that the vendor has indicated a yes for, you know, that might be like a special assessment yes, or
unauthorized work, or whatever it is.
Those types of questions.
Sure.
It needs to be listed on the PDS what work or why they said yes, and if it's not, you need to request that.
You got to get that info.
Yeah.
They don't want anything unknown.
Correct.
Absolutely. Fair enough. They're loaning you a lot of money.
Yeah.
Absolutely. Last question I have for you. Thank you. That's all good stuff. Last question I have for you. I'm an investor or a home buyer, and I want to buy something now because there's some really incredible opportunities out there for buying the property I wish to buy as an investment or to move into. And I'm thinking as a consumer, okay, I think after listening to Paula and Marty's last discussion on rates, that I should get a variable rate open mortgage and ride this through for 2 years and then lock it in when the rates come down. Or maybe I should just get a 3-year fixed. What is the, I'm throwing out a whole bunch of ideas, but what is the best borrowing approach, variable versus fixed, versus maybe a line of credit on your home? For me, as a consumer wanting to buy now, to best take into account that high rate period for maybe the next 2 years, that will cost me the least amount of money at the end of the game.
Yeah. So right now, we're suggesting often that people take a 2-year, but everybody went into the 2-year category. So those yields have actually gone up, and so 2 or 3 years would be a good bet, just because then you can do your numbers and show that your property will cash flow, or at least know that if you're going to have to feed it, what that amount is going to be. And then I would, 4 months before that renewal is coming up, I would then probably book a variable, and then move into the variable category, and then ride the rate down. That probably would be the best bet.
Based on what we know now.
But based on what we know now. I mean, we can certainly look at some variables, but right now the discount for variables on investment properties isn't particularly great.
No, it's not.
No, so I would...
It used to be, but it's not now.
And that always ebbs and flows.
Right.
So the rate discount below prime, it ebbs and flows year over year over year. Right? And it will eventually become more popular to take a variable, and the lenders will probably want more variable mortgages within their book of business. Right now, they're overweighted on variable from the last 2 years, so they're really not trying to incentivize people to take variables at this time. So their discounting doesn't, really work on an investment property. So I would probably look at the 2 to 3 year fixed. And then I would variable. Then go into the variable.
That's a really good tip. That's a really good tip. I read a stat the other day in the Globe that said variable rate mortgages throughout history of mortgages, now I don't know how far back they're actually referring to, 19 times out of 20 were always a better bet than fixed rate. I guess this is the 1 out of the 20th time that it hasn't been the best. I'm very conservative, so I've always gone fixed.
Yeah, well, it's interesting, and normally when I put clients into variables, especially if they're on the fence, often I will say, well, if you're going to go into the 5-year fixed, just pay your variables as if you're in the 5-year fixed, and then you'll have extra money going towards your principal. But I will also show them, if rates go up, what does their mortgage look like? I have a program that allows me to do that. So depending on where we are in the market or what have you, will determine what kind of scenarios I run. But prior to the rates going up, I was running scenarios up to 2% higher. And variables were still ahead. Wow. But it was that June, July increase that changed things. So prior to that, it was still, variable was ahead.
Of course, this is historic.
It was the July 1% increase that really pushed it the other way. So yes, this is the 1 out of the 20.
This is the 1 out of the 20. Wow, okay.
And you're here to enjoy
I'm
it.
here to, because if I had, my investment properties all in variable, I'd be very nervous right now.
Yeah.
But many people have taken that route. It's a little bit higher. It depends on your risk tolerance. Everybody's different. But that's good information about how to approach it now. Go for that 2-year, maybe 3-year fixed, and then ride that variable rate downwards. Really, really good information. Wow. Yeah. Good stuff.
It's crazy times.
Crazy times. Historic crazy times. Paula Siemens from Invis, the Siemens Group. I've got it now.
You got it.
Thank you for joining me again.
Thanks for having me.
You're very welcome. I hope all of you found this very informative. If you have any questions, feel free to email us and we'll get back to you. Again, thanks again.